Good morning and welcome to QuanX News. I am Prasanna Kohli. Let's take a look at what the Indian markets are signaling before the opening bell today. Indian markets head into the December 18th session with rising caution as the Nifty 50 continues to show a clear lower, high, lower, low structure. For the third straight day, the index slipped nearly 0.2% in the previous session and remains below its short-term moving averages. Momentum indicators are weakening and price action is now hovering dangerously close to a critical support zone that could decide the market's next directional move. Technically, Nifty is approaching the 25,750 to 25,700 support area, which aligns closely with the 50-day EMA and the lower Bollinger Band. Experts warn that a decisive breakdown below this zone could drag the index towards the crucial 25,500 level. On the upside, immediate resistance is seen in the 25,950 to 26,050 range, and only a sustained move above this band could revive bullish momentum and open the door for a move towards 26,300. From a chart perspective, Nifty has formed a bearish candle with bears clearly gaining control. The index is trading below the 10 and 20-day EMAs, while RSI has slipped to 46.47, indicating weakening strength. Stochastic RSI has turned bearish, and MACD remains below the signal line with the histogram staying in negative territory. Overall, the technical setup continues to point towards a bearish bias unless strong support holds. Bank Nifty is also showing signs of continued weakness. The index has extended its lower top lower bottom pattern for the third consecutive session and remains below key short-term averages. RSI stands near 49.8 and both stochastic RSI and MACD remain weak. Immediate support for Bank Nifty lies around 58,750 to 58,600, while resistance is seen near 59,150 and 59,300. The broader banking space is expected to stay volatile as traders react to global cues. Options data clearly reflects rising caution. On the Nifty weekly options front, the 26,000 strike holds the highest call or the open interest, making it a strong resistance zone. Heavy call writing at the strike suggests traders are betting against any sharp upside in the near term. On the downside, maximum put open interest is concentrated at the 25,500 toss strike, reinforcing it as a critical support level. However, put unwinding near higher strike signals weakening confidence among bulls. The put call ratio has dropped further to 0.77, down from 0.9 in the previous session. While a PCR above 0.7 still suggests some stability, the declining trend indicates increasing bearish sentiment and reduced put selling interest. This shift suggests traders are preparing for further downside risk. Volatility remains deceptively low. India VAX fell to 9.84, its lowest closing level in recent sessions. While low VAX usually signals comfort, such extreme calm often precedes sharp moves. Traders should be cautious as volatility can spike suddenly from these levels. Derivative data shows underlying pressure across the broader market. Long buildups were seen in only 30 stocks, while long unwinding was observed in 40 stocks. A significant 106 stocks witnessed short buildups, highlighting strong bearish positioning. Only 36 stocks saw short covering, indicating limited relief rallies. On the regulatory front, the F&O ban list remains unchanged. Bandhan Bank continues to stay under the ban with no new additions or removals. Stock-specific action grabbed attention in bulk deals. Akzo Nobel India shares plunged over 13% after promoters sold nearly 9% stake worth over 1,296 crore rupees. While the selling pressured the stock sharply, Goldman Sachs funds picked up a small stake, indicating selective institutional interest. Meanwhile, Nephrocare Health Services saw strong buying interest from Polar Capital and Poonawalla Vision Fund on its debut day, closing higher. Ola Electric remained under pressure as founder Bhavesh Agarwal continues stake sales, pushing the stock to fresh lows. To sum it up, Nifty is sitting at a critical juncture. Holding above 25,700 is crucial to avoid a deeper correction towards 25,500. Any recovery attempt will face strong resistance near 26,000. With weak momentum, falling PCR, and rising short positions, traders are advised to stay disciplined, trade level strictly, and avoid aggressive positions until clarity emerges. This edition of QuanX News is brought to you by QuinTalk Solutions, your trusted IT partner for delivering custom software solutions from mobile apps to backend infrastructure. If you're looking to build scalable production ready systems, reach out today and let QuinTalk Solutions accelerate your vision. Thank you for tuning in. I am Prasant Kohli. Stay informed, stay ahead, and I'll see you in the next edition of QuanX News.